Good afternoon, everyone. This is session 11 of MOOC 7, Digital Currency and Innovation. Hope that everyone is doing well today. We have 4 questions to start this session, and then once we're through those, we can get into anything we want to discuss further in the chat area. So let me start from the first question. Acceptance of innovation in the midst of fear. Most people feel threatened with change, introduction of new technologies, and new innovations. This usually makes it difficult for easy adoption. With the age of digital currency, how do you or what is the best approach to A, prep and convince those in the banking finance sector to accept the concept of digital currency, or B, present this new technology to the layman who already has a phobia for the internet to better appreciate the benefits and subsequent acceptance of digital currency? That's a good question, and it's true, most people don't like change. That's why, in fact, I have an adoption curve. If everyone loved change, everyone would be an early adopter, there wouldn't be any early adopters, everything would happen simultaneously. The reality is that there are different propensities to change, and that's probably a little bit built into one's character, and this is why at a societal level you get a curve. Now, there's factors that make change more or less likely. In Bitcoin, there's actually some factors that push against it, which is Bitcoin touches upon many highly regulated areas, and these highly regulated areas tend to slow down adoption, particularly on the corporate and professional side. So if you think Bitcoin is a super wonderful idea or distributed ledgers are a super wonderful idea, but you're concerned that your banking regulator is going to think that this is a very not so exciting idea, or you're not sure what they're going to think, or you think that they might make your life more difficult even if they ultimately accept it, then you might be pushed on the margin to not moving forward with a change. So I think on the corporate side, you're going to have 2 types of moves that happen. One is not in existing banking and finance organizations, but in startups, where they're going to aim to bring something different and innovative and change-oriented for all the normal reasons people want to do startups. They want to change the world. They want to leave their mark on the world. They want to gain market share in an industry and therefore hopefully make a lot of money when they IPO or sell their company. So those tend to be the motivators to push people to startups. On the corporate side, it's a little more interesting because here in this particular case, for the finance and banking industry, which was what was referenced in the question, in addition to regulation, you might also be worried about that some applications of cryptocurrency might hurt some existing revenue streams. So it's a double whammy against people moving towards it. What I would think would be the most effective is to focus on areas where there's a corporate benefit, and the most likely corporate benefit from these technologies is cost savings. That probably means in the beginning, private blockchains, not public blockchains for the corporates, and it probably means things like settlement and clearing, where they say, wow, well, we do these activities now. It's not new that we're going to start doing them. We just do them in a painful, old, inefficient process. And it takes us 30 days to do it and costs us a lot of money, and we tie up a lot of capital. And maybe this would be a way to do it faster. The reality is that's exactly what you see with the corporates. You're not seeing Deutsche Bank saying, great, please send me all your bank deposits in Bitcoin and I'll send it to your Bitcoin wallet and let me pressure all my customers to get a Bitcoin wallet. You see basically none of that. what you see is the big financial institutions, particularly the B2B ones, joining up with other B2B ones and saying, could we maybe use some of these private blockchains to interact among ourselves and therefore save money? So there you have a tangible benefit that's driving corporate behavior. And corporate behavior tends to very much be driven by some tangible benefit. You think you're going to gain market share, you think you're going to take market share away from your competition, you think you're going to develop a whole new line of business, you think you're going to make cost savings and therefore have better financial results. So I would imagine if you're thinking how you convince and prep banking and finance industry to accept the concept is you focus on specific benefits. Now, if you look more broadly than banking and finance, there's other corporate sectors where there are fewer factors to adoption. If you are an Internet of Things companies, you might think the blockchains or even the Bitcoin blockchain might be a very fabulous way to secure all your devices and monetize all your devices. And there's no regulatory barrier to doing it. And it's not just better than current options, it's the only option. If you're a country or a city who's looking to gain competitive advantage from other countries or cities, you might decide to jump into these areas in order to make your country or city more competitive than other countries or cities. Just today, I read an article in the Wall Street Journal that I sent around to our team that says, Dubai aims to be a city built on blockchain. Dubai has become a major trading hub, and blockchain could enhance its status by simplifying record keeping for moving goods worldwide. And if you go all the way down, the Director General of Smart Dubai says, quote, we want to make Dubai the first blockchain-powered government in the world by 2020. And are there any other good quotes in here? So the Department of Economic Development is trying to shift its business registration and licensing services to the blockchain. A bank in Dubai is looking at it for trade, finance, and logistics. And it says the aim is to replace paper-based contracts with smart contracts that will help reduce complex documentation for tracking, shipping, and movement of goods. But in the next paragraph, you see the reality. Quote, we have a very clear objective to make Dubai the capital of the blockchain industry, end quote. So this is what's really driving it. They want to pick up a competitive advantage as a country, as a city, and so they're going for it. So it's ultimately a tangible benefit. On consumers, it absolutely has to be a tangible benefit. And for consumers, it might not even be an economic benefit. Like, I don't get onto Twitter because I think I'm going to make any money by getting onto Twitter. It's just appealing to read things and see what people are saying. And I don't take photos with Instagram because I see any tangible economic benefits, but there's clearly tangible psychological benefits by doing that. So nobody is going to adopt technology on the layman side just because it's cool or neat, or maybe some very, very early adopters, tech-oriented. But for general consumers who, as I said, have a phobia for the internet, to better appreciate the benefits and subsequence of digital currency, it's the wrong question. It's just the wrong question. No consumer is trying to ask themselves, how can I better appreciate the benefits of digital currency? Consumers want to do the things that they want to do. Have lunch, talk to their family over the phone, put their kids in a good school, whatever it is they're doing. The way you get consumers to adopt is by solving one of their usage cases, making it better for them than the alternatives. And then adoption comes along as a side effect. You know, think about the internet. How many of you adopted the usage of the internet because you thought it was an important objective to appreciate the benefits and accept the internet? You adopted the internet because it was nice to send emails to people, and there's lots of music videos on YouTube, and Google Maps is really helpful when you're lost, and so on. And so this is I think this is how one needs to think about it. Now, next question. Foundational versus disruptive innovation. This article, and there's a link, and I think we can George post the link for everyone? I don't think the rest of us are allowed to post in the links in there. That's the Dubai one. Can you also post the HBR one? So this is an article called "The Truth About Blockchain." It's a bold, bold article, "The Truth About Blockchain." It's actually an interesting approach. What they're saying is it's not a classic disruptive technology. Disruptive tech, and the distinction that they're making, they're saying it's a foundational technology. And the distinction that they're making is, like TCP/IP, it does not in and of itself disrupt any particular industry or business or company. What it does is it gives a foundation layer that then people come through and by themselves, and then in a specific usage case, disrupt a specific company or usage case. So there's TCP/IP at the bottom, and then TCP/IP, which started decades ago, allows us to have email, which is disruptive, and voice over IP, which is disruptive, and the thousands of usage cases we now have for the internet, many of which are disruptive. By that logic, looking at blockchain or cryptocurrency or Bitcoin, you shouldn't expect to see the fast curve of a disruptive technology, but a longer curve over decades where it seeps into many parts of people's lives, and you'll find 50 different curves and applications for it. I think there's actually some truth to this. So I do believe there's some version of the world where I actually agree with this, that it is foundational. We will be finding applications for this for decades. And those applications are possibly largely unknown today. And until a whole bunch of societal systems change, we won't even know what they are. I think there's a slight distinction as follows. And I'm not 100% sure my opinion is, but I think there is a distinction. In and of itself, TCP/IP does not have an immediate usage case, right? It was used for messaging in a way, and the messaging that it could be used for at launch had almost no broad utility. So what do I mean by that? You had the predecessor of the internet back then, and you had a few universities and ARPANET and the Defense Department, and I don't know, a few hundred people on the whole internet. And having TCP/IP was better than circuit switching, and great. So several hundred people can use this. It's true, it's hard to get any kind of disruptive S-curve going over that. Cryptocurrency, blockchain, Bitcoin, whatever you want to call it, over a long time will open up a bunch of disruptive technologies, but it also on day one has at least one single purpose usage case that is applicable to hundreds of millions or billions of people, which is moving economic value around instantly. And so, going back to this article, you could argue that cryptocurrency is yet another of the disruptive technologies built on the foundational technology of TCP/IP. Right? You can have TCP/IP without cryptocurrency, but it's unlikely you're going to have cryptocurrency without TCP/IP or something like it, or a broad, established, developed internet. Right? You can't be running a decentralized currency if there's no place to decentralize it across. So I think the fact that you have several billion people who can use the value transfer digital cash or asset growth investment case, quote unquote, for Bitcoin day one, means you're not quite looking at this long, very slow ramp up like TCP/IP. But I also agree that a bunch of other technologies and usage cases will be built on top of blockchain-like systems, which themselves will be disruptive, and that's going to take decades. So I come out that it's a little bit of both. A couple of questions is the next one. I just run into a digital currency startup which doesn't agree with DLT and claims the blockchain is exponentially growing because of that growth, which takes memory. The blockchain will run into storage issues. Is this true? Are there working on theoretical solutions in place for this scenario? Yeah, it is true. The blockchain is getting bigger. George, can we post a link to the size of the blockchain? And you'll see it's growing. I'm not sure, and this is part of the argument, by the way, about big blocks or small blocks. Can you post the chart over time? The one of the anti-big block arguments is exactly this. If it ends up being several terabytes to run a node, no one's going to run a node, or a few people are going to run a node, and therefore it's going to become centralized even at the node level. I'm a little bit more calm about it because I think when I first got involved when I first ran my first node, it was 4 years ago, and maybe it was 10 gigabytes then, and now it's 100. 100 gigabytes now cost what, a few, $2 or $3, $4, something like that. So we're nowhere near the point where storage is a big issue. And if you look at this chart, let's look at this all time. If you go to where George sent on all time, and it's growing, and it's a little bit exponentially, but it's not quite a total takeoff. And hard disk cost per megabyte of hard disk space is also in its own exponential curve going in the other direction. So what one is really saying is the Bitcoin block size going to grow exponentially faster than the cost of hard disks and RAMs are going to exponentially drop? And then you get into a whole technical discussion of block sizes and what have you. I think we're still okay. I think we are still not at a point where these are practical problems. And I have a meta rule in life, which honed over quite some time, that most problems, let's see, so George, put a very nice chart that shows the cost per gigabyte of hard disk space went from $437,000 in 1980 to a whopping 1.9 cents today. So you can store the whole blockchain for about $1.30. Well, I don't know. I mean, for running a complete node of the complete global financial directory, that seems pretty trivial. You know, kind of most problems of the bucket, in the bucket of this is going to be a big problem because too many people are going to use it, turn out not to be true. Right? Like we heard this, I don't know how many articles I read in the 90s of the internet was doomed because so many people want to use it and all their files and, oh, video, are you kidding me? Will video be able, there's no way you're going to bring video on the internet. And once you bring video on the internet, the whole network's going to collapse. In fact, the internet was really good as a test case, but now that we want to do real volume over the internet, we probably need to go to something better managed, centrally staffed, you know, the information superhighway. And that was meant to be the enterprise version of the internet. Like, it's a really cool idea, guys. Thank you for inventing this. Now let the big companies show you how it's really done, and we're going to build the information superhighway that has a lot of capacity. It's going to be ready for prime time. That didn't play out that way, right? So I tend, and maybe someday this will be a mistake, but I tend not to worry about problems whose predicating factor is things are going really well, right? I worry much more. There's plenty of technologies that have failed because nobody wanted to use them. There are fewer examples I can think of that they have failed comprehensively because people wanted to use them, that nobody found a solution to that. The other question is on quantum computing. If there are in fact active quantum computing machines, doesn't that render the crypto useless on DLT? Is quantum cryptography a reality? We're getting a little bit out of my technical depth, but what I understand today, there are quantum machines, but they don't have that many qubits, and they are not big enough. They can't solve problems big enough to be a threat to modern cryptography. Will quantum computers someday be a threat to existing cryptography? Yes. Excuse me. If that happens, I assume we'll have to be looking at some quantum resistant algorithms, and that's an issue that's not just an issue for Bitcoin, right? All modern finance on the internet is secured by the similar types of cryptography that Bitcoin is. So if the world at large can't find a way to secure transactions and communications and encryption in general in the world of quantum computers, that's a much broader problem than a Bitcoin problem. So I suspect someone will find or continue to keep the cryptography ahead of the quantum computers, right? Using some type of quantum encryption to keep ahead of the quantum decryption. Because otherwise online banking and basically all sensitive transactions of the internet are also at risk. Innovation without consensus. Quote from your handouts. The finance industry did not innovate as quickly as the tech industry. Internet patience inefficient after 30 years of Internet Swift ACH developed very slowly. With all due respect, I don't see too many innovations in Bitcoin since its conception by Satoshi. As I see it, consensus slows down innovation. Do you think our miners are encouraged enough to adopt or foster innovations? Also, just like in the case of BitTorrent and Facebook, can we expect that some private companies will reap the rewards of the technology? Don't know that I agree with this question. I'm not sure the protocol needs to be constantly innovating. I think the reality is that you are looking at two different scenarios. One, the ability to send money instantly, machine to machine, at a reasonable cost, anywhere to any internet-connected device. It's a big deal. It's a big deal if it doesn't do anything else than that, right? Like, the whole global multi-trillion-dollar finance industry has not solved that. So, I don't know. Does Satoshi or blockchain or whatever have to make another one of those? Like, isn't that enough? Isn't that for like this technology? It's like when Apple came up with the iPhone and said, look, we're going to have screens, we're going to use touch, we're not going to have a keyboard, and now every cell phone looks like an iPhone because that's, for that generation, that actually was the answer. I'm not sure that it needs to, it's more a question of how do you adopt the other systems to support or to take advantage of this technology that now exists. And I think the places where we're getting stuck is more on that than, and I know we're in the middle of a block size debate, so it looks like Bitcoin's slowing down and I don't know what to do. And I know it doesn't match what I see day to day, but my meta rule says it's going to get worked out. Because it's another problem of growth. I'm happier, let's say in quotes, that there is a blocks filling up debate and we're stuck on that, than there are no transactions in the Bitcoin network and there's nothing to worry about in terms of increasing its capacity. So I think at one level, I'm not sure that the underlying protocol needs to make other big leaps, because we're still looking at all the different ways it can be adopted. Now, also, it all depends how you look at it, right? Like, do you count Ethereum as something different than Bitcoin? Right? Clearly, Ethereum was inspired by Bitcoin. And so maybe the way Bitcoin is innovating is by inspiring, because it's open source and not patented, it's inspiring people to go invent Ethereum. And Ethereum's pretty darn different than Bitcoin. And then there's Zcash, and then there's a whole bunch of other proposed DAOs or ICOs or storage-related systems. So here you have a situation where there's plenty of innovation, even leaving aside my initial point, there's plenty of new ideas being tested. They just don't happen to be called Bitcoin. From my perspective, that doesn't seem to matter. Really, it's not like Bitcoin is a company. It's not like I can say, oh, Bitcoin, the company, is not moving quickly enough, because it's an open source system that anyone can collaborate to. You can have disagreements, obviously, but also because it's open source, if you have a serious disagreement and you think this technology should be done in a different way, well, great. You just go and take whatever ideas you want to take from Bitcoin and you make your own alternative cryptocurrency or DAO or what have you, and you go check that out. Seems plausible. So I'm not sure that's even fair to say. I guess it's a definitional question. None of these things existed 7 years ago, and clearly they're all developed on the base of Bitcoin existing. Also, just like in the case of BitTorrent and Facebook, can we expect that some private companies will reap the reward of the technology? So far, this is not the case. This is a very interesting question that a lot of venture capitalists would like to know the answer to. So far, the market value of all Bitcoins as Bitcoins and all cryptocurrencies as cryptocurrencies is much higher than the market value of any individual company in the space, or I suspect all the companies in the space combined. So far, the protocol, so to speak, is picking up the value, not the individual companies. Don't know if that's going to change, don't know if it's going to stay the same, but I think that's the current situation. So, I think George posted another question for me. Hold on. Oh, we'll talk about that. Let's go. Those were, I think, the pre-sent questions. Yes, that's it. So we have about up to 20 minutes to cover other topics. I am now in the comments section with all of you guys. Let me know if there's other things you'd like to discuss, other questions you'd like to ask, and I'm happy to talk about it. Okay, so there are a couple questions. One is about the quiz, which I don't have in front of me. So I don't know if, George, you want to just handle that in the comments. And now there's a question about, do you see the Internet of Things blockchain security sector becoming regulated in the near future? No, actually. I think that's part of the industry that I think is going to be not regulated, because it's not regulated today. It's in very poor shape today. Internet of Things devices are more or less atrocious from a security perspective right now, and they're a huge source of malware infections and botnets and what have you. And there's no particular easy way to either secure them or update them, and so on. And so I think blockchain-based systems will be an improvement. And it's hard for me to imagine that if the world at large didn't think they should regulate the worst systems, that it makes a lot of sense to regulate the better systems. I mean, I always could be wrong. Crazy things do, in fact, happen. But I think not is my initial reaction. Next question. What do we need to see to bridge the difference between tech and the real world for us to see DAOs becoming commonplace? Had a long discussion about this with someone very capable in this area at a conference in January. You need some type of interface or operating system with the real world. Like if you're really talking about a full DAO, a DAO that operates on its own, no humans involved, well, then you have to provide non-human solutions to all the things a company does. And a company does an awful lot of things, right? Like anything from hire marketing agencies to become sued by customers, and they have to respond and hire a lawyer and go to court and decide and execute a settlement and blah, 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 blah. So this is something that is not going to be cost effective or efficient to build that question in, build all that intelligence into every single piece of software. So let's say you wanted to make the decentralized Uber, and you wanted Uber to live on your DAO blockchain and nobody's in charge, and then someone sues Uber, or decentralized Duber. Sorry, I'll see myself out. So someone sues Duber, as lots of people have sued Uber. What does Duber have to do? Well, it has to respond to court and hire a lawyer and blah, 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 blah. Well, I almost think of it as an API for real world activities that has to work in some type of semi-automated, centralized way. And then there's just layers for this to work. Like, I want to hire a lawyer. Okay, I want to hire a lawyer. But I'm a machine, right? So I pick a lawyer. Well, there have to be ratings for lawyers and price points and a whole bunch of rich metadata about lawyers. So then I can use an algorithm to hire this lawyer. And then I have to be able to respond to the process server and say, look, this guy's my lawyer. Deal with him. And I need to be able to give my lawyer access to whatever private information I have access to in order for him to be able to represent me. And so it's one of those problems that seems like really awfully complicated. And yet I believe strongly that it will happen in our lifetimes, because DAOs will certainly exist. And once they exist, people are going to want to, they're going to be pushed towards interacting with the real world, and people will start finding solutions to these questions. And so I think that's my main view on that. Yes, DAO is decentralized autonomous organization. Like the same way Bitcoin is kind of a decentralized currency, a DAO is a decentralized organization performing some type of application service, right? As I mentioned, it could be a car sharing service that does not, not the DAO itself. That was a particular, so that was I thought that was a very aggressive name. It's like saying the company. I think this is the link we actually want, the one at the top. Georgia won't let me post. I think you want the link at the top of the DAO link, which is about DAOs in general. We're at Bitcoin and Ethereum are leading edge technology. DAOs are bleeding edge technologies. We are very, very early in that situation. But it's in a way the most disruptive part of everything, because it's going to be disruptive at the level of the way the joint stock company, the way companies were disruptive. And companies didn't used to exist, which is kind of strange to think about. You had the equivalent of what today you call the general partnership. And the general partnership is a group version of a sole proprietorship. So what's a sole proprietorship? I go out into the street and start selling lemonade. I'm Antonis Polemitis, I'm selling lemonade. The problem is, let's say I sell lemonade that has spoiled, and then you get sick and you go to the hospital, and you sue me for 100,000 euros because I sold you bad lemonade, all my assets are at risk, even though I only sold you a 10-cent lemonade and I had only put in $10 in the lemonade stand. And partnerships are just the exact same thing, general partnerships, except George and I are running a lemonade stand, and I'm squeezing lemons and he's putting in the ice cubes and the nice straw. But turns out one of the lemons was spoiled and we are jointly and severally liable. So when the $100,000 judgment comes, they can chase around both of our assets. And the joint stock companies came for sea voyages, where they'd send out people for explorations to go find treasure and gold or what have you. And they said this concept of limited liability. You're only have, that's the basis of the corporation. You're only putting at risk the money you put into the company. Then if we all put in, I put in $5 and George put in $5 and we start George and Antonis Lemonade Limited, we can only lose the $10 in the lemonade stand under most circumstances, and our liability is limited to that. And that turned out to be a very, very popular invention because people are much, much more willing to try risky things if they're not putting all of their assets and life and net worth at risk when they try something risky. And thanks to that, we got a lot more innovation and ways for people to collaborate to build much bigger companies. You couldn't have public stock markets without companies. Because if you said, hey, I just bought a share of General Electric, I spent $50 to buy a share of General Electric, but I might be liable for some huge lawsuit if General Electric messes up, and I have no particularly good way to check General Electric, what they're doing, I don't think I'm going to buy any shares of General Electric. Right? So the whole modern financial service system is based on this limitation of liability. And kind of the operational system, the societal system, everything. Well, I suspect before there were corporations, this sounded absurd. Right? I suspect you heard things like, what do you mean you're only going to put in? You're only at risk. You're not going to stand behind your company? That doesn't sound very honorable. George and Antonis are selling lemonade, but there's a line between the lemonade and George, and it's an imaginary line, right? Like the company, it's not a physical entity. Company is bordering on a religious entity, right? How does a company happen? If you're in the U.S., you send a fax to the state of Delaware, and you say certain things, and you pay them. There needs to be certain words on the page, and you pay them some money, and they put a little stamp on it, and then there's a company, but I mean, there's no actual thing, right? People think of the company, they think of like the assets of the company, but the company is pretty much imaginary. And it doesn't sound fair. It doesn't sound honorable. If George and Antonis are selling lemonade and they mess up, and you go after George and Antonis and say, oh, hey, not me. Not me. Your problem is not with Antonis and it's not with George. It's with George and Antonis Lemonade Limited. Sure, we might be the employees, we might even be the directors, we might even be the shareholders, we might be all of the above. But you have to direct your complaint to the company. In a world before that existed, if you describe it as it sounds like a scam. But it turns out it's a very good idea. DAOs have that feeling now. What do you mean there's no shareholders per se? There's no owner of the company, right? It's the next idea. You're just like, you can come in and come out and buy the token or not buy the token, but there's no one in charge. There's no board. There's no shareholders, and they don't select the board of directors, and the board of directors doesn't select the CEO, and then the CEO goes and selects the employees, and and there's a line of command back to a human being. And so it sounds ridiculous to imagine you can take all those humans out of the equation. But I'm not sure it's any more ridiculous than it would have sounded before there were companies who were going to invent companies. In fact, it sounds to me less ridiculous. than we were going to invent than the leap from partnerships to companies. And so the DAOs are a very, very big idea, a very, very important idea. And they will create whole new legal frameworks for them to operate, right? Like, it's totally unclear today what a DAO is, how it's regulated legally. A bunch of people that are doing DAOs are putting themselves at risk, I think, unfortunately. And they shouldn't be. It's not fair to them, but like, you could have a regulatory decision to decide, oh, this is really a company, and you've been doing unlicensed securities activities, and some people might get in trouble. But I think it's the dawn of a new legal entity, just like companies were the dawn of a new legal entity that ended up being a much more robust entity than general partnerships were. And it might turn out that when we take humans out of the picture, maybe DAOs end up being much more robust than companies were. Because if you really look behind the hood and how a company's governance works, it's strange. I'm the CEO of the University of Nicosia. I'm in charge of the administrative operations. I've been authorized by the board and the council to do certain things. And I guess that part's reasonable enough. But then, like, the way I further authorize and commit the company is by like signing some pieces of paper and stamping something that looks like no different than how I would have stamped it in ancient Sumeria. And someone like brings a piece of paper to my executive assistant, and they bring it into my office, and I take like the stamp and stamp it. And I'm pretty sure if I was a Sumerian priest and I wanted to like make a document, I also stamped it. It doesn't quite seem like the right system in 2017. And so I think we're seeing the break points between the old system and the new system very, very early. But it's a dawn of I think, the era of a new corporate entity. But we're very, very early on. All right, well, trying to get caught up on the comments. In my opinion, which specialists are severely lacking in the blockchain industry for the broader adoption of Bitcoins? Everyone is lacking in the blockchain industry. Literally every single specialty of every single topic on every single dimension you can think of is lacking. It's one of the things slowing down the innovations that could be happening. Whether you're talking about developers or business managers or lawyers or accountants who understand it, there's nothing. There's nothing. I mean, I'm not saying there's nothing. There's maybe a few hundred people in the world that know what they're talking about. That's a few hundred people. Maybe it's 2,000. But that's absurd, right? That's not a real industry. Right? A real industry has hundreds of thousands and millions and tens of millions and hundreds of millions of people that ultimately know something about it. We're so early on this topic. There's so few people who know what they're talking about that's, I suspect, the real barrier to further development of the space. And this is why everyone should come do a master's in digital currency at the University of Nicosia, or maybe next year when it's launched, a master's in computer science and blockchain technologies at the University of Nicosia, or maybe come for a training seminar. If you don't come to us, go do that at some other university that knows something about this. Because it's the real reason things aren't moving faster. It's one of the very important reasons. And I suspect, I could be wrong, but I suspect that it is going to be very difficult to be unemployed if you know things about blockchain. Let me put it that way. There are no hard guarantees in life, but I suspect blockchain experts are going to be in high demand for the foreseeable future. Okay. we're pretty much out of time, and I don't quite see a question I can exactly answer. So unless there is, yeah, no, I think we're okay. Unless there's anything radically exciting in the last 30 seconds, I think we're good here. Thank you very much, everyone, for joining this week. Hope you all have a great weekend. And George, when is our next? Is there a next one? Ooh, same time next week. We're going to have to change the time, because same time next week I am at the graduation of medical school. So we're going to have to pull it back up earlier in the week, I believe. So I'm going to make a little change. We won't be next time. Same time this week. The same time next week cannot be, because we have graduation of our medical school. So let me know. We'll let you know what the final time is going to be. Thank you very much, everyone. Have a great weekend.